Hey, it's Dan. Welcome back to I Allegedly, and I've got a good one for you today because we have the CEO of Patriot Gold, Jack Hanney, and you guys have asked for him. And I even had somebody over the weekend say, "When's that gold guy going to come back?" Well, he's here, so thank you for
Well, thank
taking
you
the
for
time.
having me.
Oh,
Well, it's every headline, every publication nationwide, every news program. It's all about gold and silver right now. That's everyone is talking about gold and silver. Now we've been talking about it for 3, 4 years,
yeah,
3, 4 years, and forecasts: Goldman Sachs, JPMorgan, Bloomberg, Bank of America, $5,000 an ounce in 2026. Everyone. Gold was at $4,365 an ounce. Silver was over $54 an ounce just earlier in the week.
yes. So, okay, let's go through this. One thing that like you just said, for the last few years, we've seen gold and silver go in one direction. And I sent you a story yesterday when you agreed to this interview, and that was that India says that some of their smelting plants and some of the plants to manufacture silver are completely empty. And
As
people
is
are,
the LBMA,
yeah,
the London Bullion Market Association. Their vaults are completely depleted. Now, back in 22, we told your viewers that once gold surpassed $2,000 an ounce, there was no looking back. Then we said in 23 that once gold surpassed $3,000 an ounce, there was no looking back. Now gold has surpassed $4,000 an ounce, and what we're telling your viewers, in 2026, once gold surpasses $5,000 an ounce, there's no looking back. There's still an opportunity right now where gold is at $4,200 an ounce today to $5,000 an ounce for a 25% gain over the next 12 months in gold. That's a 25% gain. And once gold surpasses $5,000 an ounce in 2026, like Bank of America, Goldman Sachs, JPMorgan, Bloomberg, all forecast it doing.
UBS. I mean, we could go on for
HSBC.
There's like a dozen of them
HSBC.
right now.
Every single big bank, because we're ahead of rate cuts here. This is happening ahead of rate cuts. We know we're going into a rate cutting cycle, not to mention that Jerome Powell is going to be out in 2026.
Without a doubt.
So then where are rates going to go once he's out?
Well, one thing that people have talked about is that Trump could do a move where he names his predecessor. This is who's coming up. This is the new manager of the team. And he'll basically be a lame duck, Fed chair.
He is naming the predecessor to Jerome Powell. He's going to be appointing the Fed chair. And there's a lot of talk about the U.S. revaluing its gold. So it's beneficial to the government to revalue their gold at these higher prices to offset our $1.97 trillion deficit.
Okay. This is something that's been sent to me by a lot of people, and it's not a conspiracy theory, but let's talk about this because I've had really, really credible investors send this to me. And I want the audience to understand what this is. Basically, the federal government, to offset its deficit,
$2 trillion deficit.
We're going to take gold that are in the Federal Reserve in Fort Knox, wherever you want to call it,
and just revalue it.
Well,
because currently its value is set at, I think, $40 an ounce.
Gold. We're not talking silver, guys. We're talking gold right now.
$44 an ounce, set back in, say, 1972 or something like $44 an ounce. So what's happening here now is the higher the gold prices go, the government can go in and revalue our asset classes, what the government possesses, to offset that $2 trillion deficit. So it even benefits, look, as far as trade as well, a weaker U.S. dollar benefits the U.S. in trade. So, I mean, we look at what's happened with the U.S. dollar over the last, 10 months. It's down about 9-10% if you look against, say, the euro, against the yen, the yuan. But that's why gold prices are where they're at.
Now, here's the thing, guys. If they revalue gold to do this, I've heard 5 different numbers, but the two that I've heard the most are $12,000 an ounce, and I've heard it as high multiple times from multiple sources that gold could be revalued at $24,000 an ounce to offset our deficit.
Well, I mean, and the most credible forecasts are, you have Jamie Dimon. the CEO of JPMorgan, Jamie Dimon, saying gold could easily go to $5,000 or $10,000 an ounce in this environment. $5,000 to $10,000 an ounce. You also have veteran investor CEO Frank Holmes, who said gold is going, now he's the one who called $4,000 an ounce gold. So Frank Holmes is the one who called $4,000 an ounce gold. He now says that gold will go to $7,000 an ounce by the end of Trump's term. And then Ed Yardeni of Yardeni Research just recently wrote a piece this week in Fortune magazine, okay, that gold will go to $10,000 an ounce by the end of the decade. By the end of the decade. Now, we're coming up on 2026, so we're looking at 4 years, $10,000 an ounce gold.
You know, when you think about stocks, and one thing that we have dealt with on this channel tremendously is the bubble. And when's the bubble going to pop? And, you know, you could go to...
Did you see the Aaron Ross Sorkin piece?
Yeah.
It was on 60 Minutes about drawing the parallels to this market and the 1929
He
crash,
wrote a book, and
which, by the way, happened at the end of October.
Yeah. Now,
at
here's
the end
the
of
thing
October.
about this. The 1929 crash we've talked about a lot. I've talked about on your commercials on my channel, and that is eerily similar to what we have right now, with the stock shooting up, you know, right before the crash in 29. We saw this in the 70s. We saw it in 2000, you know, 2008. We saw things take off. But this time, this is worse, and this is a complete parallel. And all the economists are saying that this compares to 1929.
Well, that and all the biggest stock market crashes in history, 1929, 2000, and 2008, all happened after the first rate cut. And the Feds just cut rates about a month and a half ago, a quarter basis point. Now, you know, Mark Twain says history doesn't repeat itself, but it often rhymes.
Yes.
And if you look, the parallels, not only the S&P back in 1929 was up 90%, right? 90%, which if you look at Liberation Day, April 2nd, the tariffs, the market has now recouped 30% of those losses, 30% in just, you know, 5 or 6 months time, which would be about a 90% gain year to date. Identical to 1929. The S&P went up 90% just ahead of the crash, which was October 24th and October 27th of 1929. And you know, we're about a week and a half away from that.
Yeah.
A week and a half.
You know, everything right now, let's face it, you know, I like where the government's going right now. I like the direction myself, but I think that we're in precarious times right now.
We are.
And we have to protect ourselves.
The reality is, I mean, yes, we have a protectionist administration, you know, make America great again, right? And you have to understand that globally, because gold is really a global asset, globally, you know, we're upsetting China, Russia, you know, Saudi Arabia, all these other governments, and what they're doing ever since Biden imposed those sanctions on Russia, their central banks are stockpiling physical gold. Now, you know, there's ebbs and flows in the central bank purchases. Typically, they taper off in the summer months, but Q4 and certainly in Q1, look, the best time to purchase gold is right now. While other people are planning Thanksgiving, their Christmas holiday, they're spending money on, you know, travel, which, by the way, I mean, you see how expensive travel is.
It's insane. We talk about it all the time.
But the smart money is investing in physical gold and silver right now ahead of the new year.
Yes.
Ahead of the new year, this is the time, October, November, December, to be stockpiling physical gold and silver ahead of January 2026.
You know, people have talked, well, gold is so expensive right now. You know, Bob Kudla, who's a channel favorite, does the stock market. He thinks that the sky's the limit for precious metals, for gold and silver. He just thinks that you haven't seen anything yet. It's not even close. And when it takes off, he says it's going to continue to take off.
Well, if you have Ed Yardeni forecasting $10,000 an ounce by the end of the decade, if you have Jamie Dimon saying it could easily go to $5,000 or $10,000 an ounce, and if you have Frank Holmes forecasting $7,000 an ounce by the end of Trump's term, I mean, we're sitting here at $4,200 an ounce. Again, back in 22, we said once it surpassed 2,000, there was no looking back. 23, When it surpasses 3,000, there's no looking back. Now it's surpassed 4. But once it nears 5, there'll be no looking back. And one last thing I want to mention. So gold surpassed its inflation-adjusted all-time high of $3,500 an ounce about 12 weeks ago.
Yes.
Silver always follows gold. Always. It lags, but then what happens is, gold's up 56% on the year in 2025. Silver is up 76% in 2025.
And 76%.
It's the best performing asset class. The number one performing asset class in 2025 is silver. The number 2 is gold. But silver's inflation adjusted all-time high is $209 an ounce.
Which we haven't seen yet.
And right now we're looking at silver at 50.
Yeah.
50.
Okay. I want to remind everybody that our number one sponsor is Patriot Gold Group. And for, seriously, for all your precious metals needs, they're number one rated for 9 years in a row with consumer affairs. They have over 10,000 clients. They've done well over $1 billion in transactions. IRAs, 401ks, no fee for life on qualifying rollovers.
On qualifying rollovers, but one big thing as well, if you look at other precious metals dealers and you go to the Better Business Bureau, look at the number of complaints. Just look for the number of complaints these other precious metals dealers have. Patriot Gold Group with over 10,000 clients, over $1 billion in transactions. Consumer affairs top rated for 9 years in a row, not one. Not one single complaint on the Better, absolutely unblemished, not a single complaint on the Better Business Bureau. Not one.
Call them today, 888-330-1431. If you don't want to call, you can use the link below. They will send out a free investor guide. But guys, I love the company. Their customer service is amazing. I have people that stop me all the time. In fact, one thing I started telling you the story was at a restaurant over the weekend and a woman walked up, and I'll never forget her name. Her name was Lacey. Lacey said that her husband watches my show all the time, but she had a bone to pick with me and I need to talk to you about something you did. And I'm like, oh yeah, what's that? And maybe it was a news story, something. She said, you really didn't push silver enough. You really didn't force it on us because we had no idea it was going to go up as much as it did. And you've talked a lot about gold. I'm always talking silver, guys. I have a ton of silver. I bought silver from you guys.
I'm a client. And you're doing it now, and silver is just getting started. So silver just surpassed its all-time high, but not inflation-adjusted all-time high. Its all-time high. Silver's all-time high was set back in 1980. 1980.
I remember.
And that was over $50 an ounce. Silver surpassed that all-time high and is on its way to its inflation-adjusted all-time high, just like gold. It was about a year and a half ago that the CEO of First Majestic Silver, Keith Neumeyer, said that if automakers like Tesla purchase silver mines, that we could easily see $125 an ounce.
Okay.
Easily.
Now, what about all these data centers that require silver?
All the energy.
It is insane.
It could be the next AI trade.
Yeah.
Is silver.
So and again, let's talk about silver a little bit more because people don't realize the industrial uses of silver, and there's
half the demand.
And also, we do not currently, forget the price for a second, which I can't believe I'm saying, but forget the price. We do not meet the current silver production demand that we mine out of the ground to meet current production. Forget about all the pie in the sky. Forget about solar. Forget about the cars. With the medical and with what's already happening right now, we don't meet the current demand.
Well, the past 3 years, there's been 170 million ounce supply deficit for the past 3 years. So what they're saying is that silver could follow palladium's trajectory. So back in 2016, with the electrification of vehicles, there was significant supply shortages of palladium. Palladium was $500 an ounce in 2016. 5 years later, in 2021, palladium was $3,000 an ounce. Palladium went up 500% in 5 years, and they're saying that it's identical with silver right now in the significant supply deficits and the overwhelming demand for silver, that silver could very easily, and if silver went up 500%, that would put it at $250 an ounce, surpassing its inflation-adjusted all-time high. So it all makes sense.
Yes,
It
100%.
all makes sense. We've been telling your viewers this
For 3 years.
for 3 years.
It's gone in one direction,
So if there's
guys.
anything to take from this, look, we're not trying to sell you anything. This is like a PSA. It's a public service announcement. We have been informing you for the past few years about gold and silver.
Silver is still affordable. I think gold's affordable, guys, right now. I just think that you're going to be able to use gold. You know, it's all these municipalities, states. I think is it 13 states now that say gold is cash?
I know Florida was one just recently that it's legal tender.
Yes.
That
yes.
now silver is legal tender.
Do you have any gold on you, by the way?
You know, as a matter of fact, I do.
You know, one thing that Jack taught me.
But Dan's been talking about silver, so we'll give Dan the silver.
Okay.
And I'll keep the gold. So here's the gold right here, a beautiful gold American Eagle. I mean, this right here.
Oh, this is really nice.
So, yeah, this protects the purchasing power of the dollar.
You know, we filmed in this park about 1.5 years ago, and we had people that go, wait a second, you know, you can't eat gold, it's not money. And you said, wait a second, from where I'm standing, I could go a little over a mile from here and I could cash this in. And it was what, $2,800 then or something like
Yes.
that. And now it's much, much higher.
So, I mean, the thing is, my wife goes to the grocery store. A loaf of bread now is about $20 for a nice loaf of bread. 3 years ago, it was $9. This, 3 years ago, was $2,000. Now it's $4,200. So as you can see, as the dollar depreciates, as inflation is persistent, because we had been warning your viewers about the stagflationary environment. One other thing about silver, they're saying it's eerily similar to the 70s, stagflationary environment.
yes.
Do you know from 1974 to 1980, silver went up 1,300%. 1,300%.
Wow.
But yes, what gold and silver does is it protects the purchasing power of the dollar. And it's been doing this for the past 20 years. Gold and silver, gold has significantly outperformed the S&P over the last 20 years. Since 2000, gold has significantly outperformed the S&P and the stock market.
We've seen so many warnings. Robert Kiyosaki, CEO of Bridgewater,
Ray Dalio. Yeah, Ray Dalio.
And he said, what would you do if you had a 40% hit in your portfolio? And I'm like, I go, that's a Kiyosaki. I know it was Ray Dalio said that too. So you're seeing crazy things, we're in a civil war. You need to protect yourself. You need to have metals. You need to have things out of the banking system. We're getting warnings from very conservative people. Michael Hartnett from Bank of America,
yep.
who absolutely, is a very financially conservative voice, is talking about how important metals are right now.
Well, do you know in Market Watch on Monday, it said, why are so many economists in fear of a 1929 style crash? Now, when the crash of 1929 happened, do you know it took 25 years to recoup the losses and return to the 1929 peak?
And a war too, don't forget
25 years. 25 years is what it took. And Ray Dalio, he said, he and Stan Druckenmiller both said, run to gold and silver.
Yeah.
Run to gold and silver.
See, I love this because, you get, Robert Kiyosaki, is like Peter Schiff, he's been saying it forever, but they're going to be right.
Yeah, but Ray Dalio is the most successful hedge fund manager of all time.
Without a doubt.
Bridgewater and Associates. And he's a huge proponent of diversifying your portfolio with physical gold and silver. And that's all we're suggesting doing. So, now we have, when you have Jamie Dimon, Michael Hartnett, like you said, or John LaForge of Wells Fargo had said a few years back, we are in a commodities super cycle with several years left. And there was a report just this week that said there's several years left of this bull market for physical gold and silver. One thing to note for your viewers to know, do you know retail ETF demand has not even come close to peak levels that we saw back in 2020, that we saw back in 2008. So the retail ETF demand has not even reached those peak levels, which indicates that there are several years left in this run.
We have to, again, guys, Patriot Gold Group is #1 rated for 9 years in a row. Jack and his team are absolutely fantastic. You don't have customer service like this. You don't have thousands and thousands of 5-star reviews if you're not doing something right. So please call Patriot Gold Group today, 888-330-1431. Let them answer all your questions. You're dealing with owners when you deal with a company like this. You're dealing with a company that absolutely loves their clients. They want to see you successful, but the sky's the limit for gold and silver right now.
If any of your viewers have a question, they can call into that toll-free number and they can ask for myself, Jack Hanney. And I'm available to answer any questions whatsoever, explain anything that we've gone over on this video today.
Great.
The forecast for silver, what we're looking at as far as the supply deficits like you had brought up, and also the forecast for gold.
See, I think the supply deficits are a big deal, but let's just go into one more thing, the revaluation of gold. Let's end this thing with this. If that happened, I mean, what numbers have you heard? Have you heard,
Well, certainly $7,000 an ounce by the end of Trump's term.
Okay.
Again, $10,000 an ounce, which is Ed Yardeni of Yardeni Research, Fortune magazine, just this week. Look, I mean, across the board, we are what your viewers have to understand, and it's the most important thing to understand, please. We are ahead of rate cuts.
Yeah.
We are going to have multiple rate cuts, which is significant tailwinds for physical gold and silver.
You're going to see, we haven't even got, the labor market is bad right now. And unemployment at 4.3%, which I don't believe.
But because of the government shutdown,
yeah,
the Fed is relying on private data right now.
Absolutely. I did a video on that earlier in the week about how the Bureau of Labor Statistics is, closed.
Yeah.
The door's locked.
So they're relying on FedEx and UPS and ADP private payrolls.
Bank of America talking about their hiring, and there's gonna be problems in the economy when it comes to the job market. So with that coming, you're gonna see gold and silver spike. It's just
the last
that simple.
Private sector payroll that we saw from the previous month was a loss of 30,000 jobs. They estimated that there would be an addition of 50,000. There was a 30,000 job loss.
Amazing.
So, I mean, that's just where we're at.
Amazing. So, okay, guys, contact Patriot Gold Group today. You can always reach out to me if you have any questions. Don't forget to hit the like button. Please subscribe to this channel. There's always good stuff. We do business news every day. And you want to get a hold of me, it's hello@iallegedly.com. But thanks, brother. I mean, I really do.
I can't believe, so we're doing another one of these.
Yeah.
And we've been doing these for 3 years. And I can't emphasize enough how we were encouraging your viewers to call in before gold hit 2, before it hit 3. Now we're at 4. Please call in before it hits 5.
Okay.
And silver at $50 an ounce. Silver is just getting started.
I'm going to give the number one more time, 888-330-1431. Thank you, sir. I would talk to my last year, I got to get a hold of Jack. But all these people have come up to me, between you and Bob Kudla, they always want to know what's their insight. But the gold guy, people have been asking about you a lot lately.
Thank you.
It's all
I
good.
appreciate it. Thank you.
We'll see you guys very soon, and onward and upward, guys.
In a few months, we could be talking. We'll do this again in February.
Okay.
And I think we're going to see gold probably up over $4,700 an ounce.
Okay.
And silver nearing 65.
Jack called it. Jack called it.
Yep. Thank you.